Welcome back to another edition of. Hold on a second. I got to check here to see if you can actually even hear me. Can you hear it? You can hear me. Awesome. Welcome back to another edition of Vishal and Company. This week I've left on the headline that Bitcoin goes crazy. When is that never not the case? So I think it's probably going to stay there for a while. So this week, unfortunately, Maddie is, as usual, working hard. She's on set right now, so unable to attend. It will just be the four of us leading the show. Joseph has put on a shirt to fill in. Thank you, Joseph. Appreciate the effort. Awesome. We have Vishal Tura here, who is our chart master, TK, our fundamentalist scientist, and also Joseph, our crypto guru, and me, the old man with his pants up around his armpits, ready to scream about anything, especially that fucking Musk. So let's get the show started. And Vishal, there's some Fed news that we should probably be talking about. You know, some pretty important stuff. Why don't you start the show and let us know what's going on there?
Yes, sir. Fed news, big day on Wednesday. We had the Federal Reserve interest rate decision. It was actually a big week for central banks in general. We had actually the Reserve Bank of Australia on Tuesday. We had the Fed on Wednesday, and then we had the Bank of England on Thursday, yesterday. So a bit about the Fed first. Australia, you know, pretty much the same. They didn't change anything except, hey, you know, we're going to be looking to raise rates and taper soon. The Fed, they did sort of give us, I guess, a bit of a warning last month where they told people, yeah, we're going to be looking to taper sometime in November. And met all expectations. The Fed is beginning to taper in November. And right now they are using $120 billion to buy assets, $80 billion to buy bonds, and $40 billion to buy mortgage-backed securities. And now that's going to drop. So $10 billion less in treasuries. So that takes us to $70 billion in treasuries rather than $80 billion in treasuries. And also $5 billion less in mortgage-backed securities. So instead of $40 billion, it's going to be 35 billion. And yes, folks, B, right? Not, you know, I'm not saying million, I'm saying billion.
Woo, what a cut.
Yeah, so still 105 billion per month. And people have sort of referred this in the past as like a token taper, right? It's 15 billion, really, it's not much. But
It's
the
nothing.
plan is, and the Fed's plan is basically from now till July 2022, they're going to taper more and more and more. And I guess, you know, we're going to see if that's the case going forward. In terms of rate hikes, the Fed has made it clear that, hey, look, once the tapering is done, that's when we're looking to raise interest rates. So basically, if the Fed is saying, okay, July 2022 is when we stop tapering, we're looking at around that time is when the Fed's going to start raising interest rates. But again, I just want to say that there's still a lot of like uncertainty because, of course, if inflation starts to pick up, even though the Fed is saying that inflation is transitory and it's going to last till mid or go through mid of 2022, if it starts to pick up, the Fed might have to raise rates to act on that. And, you know, certain central banks are already doing that. So that's a big sort of uncertainty, right? If that happens, is the Fed going to have to play catch up, or are markets and market participants going to say, okay, yes, inflation rates are okay, they're high. It's 6%, 7% now, but the Fed told us it'll be transitory, so let's just wait and see till next year. So, you know, there's still that type of uncertainty, and I just want to quickly here show you guys my article here on EQUITY.GURU, and I want to show you guys these two graphs here. Obviously, this has probably changed now, but starting May of 2022, there is a 23% chance of a rate hike in May. So that would be, you know, before the July, you know, full taper, I guess, is over. So maybe there's some, you know, some bulls, I guess, or some people who are believing that the Fed will hike before that and that the economy is going to get better from now till then, and the Fed will taper before July 2022, or sorry, taper fully before July 2022. Meanwhile, around June, it actually increases to about 45%. And again, this has probably changed. It could be higher, could be lower, but this is just sort of giving you a sign of the probabilities the markets are beginning to price in for that next rate hike. So, that's the Fed. Market liked it, obviously. We see a trifecta. Well, actually, what's the word for it? It's a quadfecta, I guess, for
yeah, I guess
markets.
so.
But
I guess
quadfecta, right? So S&P 500, new record highs, has been making new record highs day after day. The NASDAQ as well, new record highs after that big breakout. And the Dow Jones as well, record highs after record highs. And then this is the one that's a bit of surprise to people, but the Russell 2000, so the small caps, which have basically been ranging since February of this year, has actually broken out and made new record highs. So maybe this is the retail crowd now saying, hey, let's run into small caps, or maybe this is funds saying, hey, everything else is overvalued, so why don't we look at small caps, which seem cheaper compared to everything else, and let's buy that. So the market likes what the Fed said. We haven't seen a taper tantrum. So that could be because either people are looking at this 15 billion in taper as just a token taper, that it's really nothing, or markets pricing in basically no more tapering as we go forward, and they don't really care if the Fed starts to sell off and tighten that cheap money policy. So still some uncertainty. The Fed is tapering, but like I said, I think that inflation data, we have to keep that in mind as we go towards next year, and especially this whole idea of the Fed telling us that, hey, inflation is going to last through the mid 2022, and when it starts to pick up, I just want to sort of see how market participants are going to react. Are they going to be like, hey, the Fed has to quickly hike rates now because things are going out of control? Or don't worry about it, folks. The Fed said this was going to happen, and it'll drop off next year. So I find that whole thing interesting, and we'll have to sort of see. And again, I'm not sure about you guys, but like there's other people who believe that the inflation may have already peaked. I don't know. Maybe it has, but
no.
No, right? Yeah.
The problem with that philosophy is that the inflation has been attributed to the breakdown in supply chains and also manufacturing, not just supply chains.
Yeah.
And so the knock-on effect from that is not temporary. That lasts a lot longer down the road than anybody would have figured. And because of that, there's a cumulative effect that builds based on the long-standing effect, meaning that it's just going to sort of get a little bit worse each time.
Right.
Used cars are going to go through the roof.
There we go.
And that's a big. So this you don't really realize it, but that's for the most part the working American public can't afford new cars, or at least don't necessarily or shouldn't get into car loans because there's a bunch of bad car loans out there. But they can only afford to get these kinds of cars, and if they start to get priced out of the market, then that means that they can't fill those necessary jobs that allow a supply chain to actually operate. And I think we're also going into a steady rejiggering of what it means to have a global supply chain. And people are beginning to realize that having a supplier in another country is to their detriment, regardless of the savings that they may have, because they're not only dealing with the shipping, they can't control the political situation, or at least without turning it into a despot dictatorship. There's all sorts of problems with this. So the idea of how we actually do business now is slowly reforming, and in a positive manner, but not without negative effect. Right? So I don't think this idea of inflation is going away. No. I think it's actually only going to get worse. Right. I think the market that some are beginning, as you showed by the Russell 2000, are beginning to realize that these big stocks are way fucking overvalued to the point of criminality. And also to the detriment of our economy. We're still we're going to have to experience the fallout from that, because as the inflation raises, people are going to start to pull this fantasy money out of the market to try and cover their $20 loaf of bread, which is going to drive up the price of the loaf of bread even more. They're going to go back to the market to try and get more money out of it. The stock prices are going to start fucking collapsing. Oh man, it's just I don't see much positive coming out of this. TK, am I alone in this?
No, I completely agree with you. I think this kind of shows why nothing good ever comes from nursing a 6-year-old developed child. you just kind of self-perpetuating all the issues that are going to come after. So yeah, I completely agree with what you're saying.
Yeah. Just before we move on, I'll just show you guys gold here. So, gold is seen as that inflation hedge. I've been arguing, I know Galen's been arguing as well, that a lot of these hard assets, commodities, are what you want to watch. And, when you see gold move up like this, when you see silver move up like that, heck, I think all the commodities, oil, natural gas, wheat, corn, platinum, palladium, keep an eye out on all that kind of stuff, because if they all start to move, the story might be supply chains, but obviously I don't know if that really applies to things like gold and silver. It'll apply to maybe oil and natural gas, wheat
Well,
and
gold and
corn.
silver in the terms of them getting equipment that they need to mine the
Possibly,
minerals in
right,
the
yeah.
first place, right? So
Yeah,
there's that to
yeah.
consider as well.
Yeah, there's that, but I mean, I'm just gonna say I might be looking at this as our inflation hedge, or what the market thinks of inflation. If we do see gold and silver
Yep.
go up, maybe the market is beginning to, price in longer and a prolonged inflation. And just quickly, I just want to bring up the Bank of England, because like, take a look at some of these headlines here from ABC, Bloomberg. Bank of England credibility took a big hit. Bank of England holds rates steady, confounding expectations. So everyone was expecting the Bank of England to raise interest rates by 15 basis points. So just to let you guys know, the Bank of England is at 0.10%, whereas Canada and the US are at 0.25. So a rate hike of 0.15 would take them, to the same levels of as Canada and the US, which is still low, right? 0.25. So the market was expecting the Bank of England to raise rates, but instead they did not. And not only did they not raise rates, they also kept their taper. Sorry, not their taper. They kept their easy money policy, or their asset purchasing program, at 1.2 trillion British pounds. Still quite a high number, right? Close to 1 trillion US dollars per year. So, if you break that per month, I think it's still close to about 100 billion per month, similar to the Fed. So they didn't change that, and the market was expecting them to do that because of inflationary pressures. So, we talked in the past about confidence crises, and hey, okay, what if the central banks don't want to raise interest rates because of the amount of debt that governments have now, and consumers have, right? So technically, maybe raising rates by just a little bit could start a recession on its own. So I think this in itself was interesting, because a lot of the market was expecting that. And I think the British pound, if you take a look at the pound US dollar, it did fall quite heavily on that rate decision. But, interesting time for central banks. And I think, as we talked about, the story will develop, and we'll probably be talking about this in many weeks to come.
Very much so. Also, as a note, there are some celebrations south of the border as non-farm job payrolls increased by 531,000 during the month of October. One could only wonder if that's seasonal workers in all those Halloween costume pop-up shops. But, that's relatively good news. Deserves a further look. Perhaps the economy, at least locally, is experiencing a bit of a push. But honestly, for me, this is just a spike. There has to be a sustained push for me to actually believe that there's some change, that's formative change that's taking place. Would you not agree, TK?
I would agree. There's actually a fund manager who kind of focused on inflationary pressures. He retired just after 1970 in the U.S. So just after their I say hyperinflation, but just after their 13% inflation. And he said during the time, he realized that the thing that led to the worsening of the situation was a tapering by the Fed, which is counter to what a lot of people think happens in that situation. He said it worsened the situation, and it caused a deeper recession. And most of the inflation came from that recession, where you were talking about the self-perpetuating cycle of people moving cash out of the markets to fund consumption and stuff like that. Because people initially, they were delaying their consumption with their investments, and then they were forced to liquidate a lot of their positions, which forced a lot of people to lose jobs or lose their pensions, etc. And then it kind of just trickled down, making the situation even worse. And I feel like we're kind of heading the same direction, because he focused on fund flows. So the movement of the institutional monies, specifically endowments, so the schools and charitable foundations. Majority of them right now are 60% in equities and private equity and hedge funds, and the rest of it is in bonds. And it's because there's a whole generation of money managers who grew up knowing equities as the best case investment outside of bonds. So it's like there's a disproportion to what the long term should be, and he's like, yeah, it's gonna happen again and again and again. And Ray Dalio is kind of on the same side, saying, yeah, this is just, it's repeating itself. It's gonna come back again. Don't know how deep it'll be, but it'll definitely be deep. Ironically, there's on the other side of the spectrum another money manager. She's a big bull on Tesla and stuff like that. I won't mention her name.
Oh God!
I think she sold some of her Tesla actually, but she feels we're gonna go into a deflationary period because of money velocity. That's her thesis right now, and it's kind of, she was arguing with Jack Dorsey on Twitter.
Oh, I saw that.
Yeah, so.
Gee, I wonder why the ARK fund isn't tracking the NASDAQ jump. You know what I mean?
Say that, Two comments. Like, I'm sort of surprised the ARK fund hasn't taken off while the NASDAQ was going up. But I mean, just about Cathie Wood's money velocity. Like, the thing is, money velocity actually peaked in like 2000, and it's never really risen since then. Like, money velocity has been actually in a decline, and
she's been fucking responsible for that.
Well, I was going to say money velocity is key for that inflation, because when you get to hyperinflation levels or really crazy inflation, it's more about people spending money as quick as possible to buy things because they know or they think that tomorrow the money's going to be worth less than today, so it's better to spend it and use it now than before. But
well, honestly, in a really healthy economy, there's only a portion of money that sort of stays out of the mainstream, while the rest of it is supposed to circulate. Yeah. That's what's supposed to happen. Yeah. Anyway, sorry, I'm just being crusty.
No, but it's true. In a perfect economy, there's savers and they're consumers. Yep. Would hope the more developed economies have more savings than consumers. But it's kind of like flipped on its back, and then the imports and exports come in and mess up the whole situation. Yeah. But it's something sorry, man. Yeah. No, it's something I slowly realized with some of the earnings that were coming out this week. So not to talk about the big names, but Peloton and then Snapchat last week. There's other big names. Robinhood came out, and majority of them are mentioning some sort of constraint out of their control. So, for example, Robinhood, it's obvious.
Their inherent lack of value?
Yeah. they weren't creating as much value as they were supposed to. Peloton, people realized it's just a iPad on a bike. So it's just like, okay, people are like, oh, damn, we need to kind of curtail our consuming if this inflation thing is kind of serious. Yep. And companies are starting to feel the pressure. The stock market overreacts, of course. Yeah. But it's like companies are starting to speak about input costs, and some of the farming companies are coming out, and there's one in Saskatchewan that was a canola oil producer and is now in the security business.
Or are you talking about a company called Input Capital?
Yeah, Input, yeah. So it's kind of like people, it's like the shift is so manic, and it's all over the market, but it's going to slowly be realized. And by that time that it's the inflationary pressures kick in, and those, we're going to be in another recession. I don't know how long that will take, but that's the big prediction out there. The ironic part is everyone has put that prediction out. No one is saying it won't happen, but the market is doing the complete opposite.
Well, I just gotta say, I think if I'm looking for real value, I'd probably be putting it in Squid Game coin, right, Joseph? Is that where I'd be looking?
That was an awesome transition. Congratulations on that one.
I heard it's trading at a discount.
It's finding support at 0, I think. But.
Personally, it's hard to get off on a rant when you got to start. We got to start the rant with an explainer. But I mean, like, Squid Game is one of these coins which you can they honestly make a pound of them a day on Ethereum, right? And they pump it up briefly, and they pump it in all the appropriate places, and grandma puts their life savings in it, and then they pull the rug out from under you. I mean, this is why, honestly, this whole altcoin thing needs to be heavily regulated. It's because you can't look at enough of these coins and figure out which ones are going to be the next Shiba Inu, and which ones are going to be the next Squid Game. I mean, Shiba Inu and Squid Game, they're both the same type of coin. It's just one received, I don't know, a positive push from multiple different places of the internet and has a solid, reputable development team. And Squid Game is a couple guys in their mom's basement who figured they could make a couple quick $1 million and just by getting grandma to throw her life savings into it, and then backing out and disappearing. It's like, how do you do your fundamental analysis on that?
Right. Yep.
Well, exactly, Joseph. I mean, because these are assets, and to put a security on the public market, you have to go through all sorts of due diligence, fill out forms. I mean, okay, Tesla and some others are exceptions to this rule. But there's supposedly the SEC has regulations in place to ensure that what you're putting up is not bunk. And right now, as you were saying, Joseph, this doesn't seem to be the case. Do you see this regulation on the horizon? Are people actually looking at this, or are they still just going, I got to make a quick buck?
Right now, I don't think there's been enough damage done for the SEC to really start giving a shit. They are, like, we periodically have one or two coins, and the SEC is probably beginning to look at it, but beyond actually getting around to figure out how the technology works and how to penalize the onload and offload aspect of it, I'm not sure they're there yet. They're too busy dealing with Valkyrie's upcoming Bitcoin spot ETF. Like they're trying to figure out what to do there. I mean, that is more their avenue. They know more or less what to do there, but for these things, I mean, you got a question about whether or not it actually is a security and it actually is in their purview. Because I mean, it's not like it has a company attached to it, right? Like it's all completely decentralized. It doesn't have a name. I mean, I've never heard of. Honestly, I haven't even seen Squid Game on Netflix. But I mean, like, it's not attached. Like, who do you penalize? Is it Netflix?
No, that's an interesting concept. So do you think that at this point then they have to start defining responsibility in regards to this? And let's leave the SEC out of this. Let's go with consumer protection. You know, if it's outside the purview of a trading commission, what about, you know, because these are retail customers basically that are buying into this thing. Do you think there are avenues that they can take? Can they make sure that exchanges that can physically back up the worth of what they're trading on their platform before they actually start trading?
I'm not sure entirely what government or organization would be necessary to do this exactly. I mean, consumer protection does make a certain sort of sense, but I mean, again, it comes down to who do you point your fingers at?
Yep, exactly. I'm just reading things here, and they mentioned that, right?
Is that the death knell of crypto then? If you cannot point your finger, because somebody has to take responsibility, don't you think?
I was going to say, at this point, the controller of the currency would have taken a look at this if it was affecting people on a match, just like they did with the banks, where they were like, oh, you know what, you guys are creating these financial assets that we don't understand, that don't make sense. We need to set up some sort of system that protects consumer customers. Then the FDIC came through and all that, but I think it's weird. It's in a weird situation right now where if you go on most platforms, the people who are talking about it are the diehards, the people who actually understand what's going on, and they've put their money and their backs into the research and they've read the white papers. There's the other side where, no offense to these people, but you know, if I see someone on Instagram who has an OnlyFans and also is a crypto investor, I'm concerned. You know,
and that's prevalent.
That's pretty solid, actually.
I just want to read this out to you. Take a look at this about the founders of Squid Game. Although the now defunct website listed a certain David Canny as the project's CEO, a supposed University of California Irvine alumnus with work experience at Netflix, no LinkedIn profile of said person exists. The same goes for other executives, and they mentioned their names here. None of them has an online track record, and it's safe to assume that none of these people had any affiliation with Netflix, even if those were their real names. So.
That's a scary concept, right? I mean, this somehow, in any form, even though Amazon's one of the worst offenders, if you come forward with a product, you have to have something to back it with. Like there has to be a person or a place or a business name or something to be able to sort of get behind this product. And as far as I can see from what Vishal has just read out there, this is like a ghost asset that just appeared out of fucking nowhere. We don't know who made money off of it. Somebody probably did. And now it's dead, and a bunch of people are the worse for it.
Yeah.
True. I think the metaverse is coming.
I mean, it's definitely one of the risks you take whenever you get into crypto. Like if you go outside of the top 10, you're raising a risk, basically.
Exactly.
Like you start buying in some frothy altcoin because it shows up on Business Week. I mean, you're going to be like, well, who knows? Within a week or two, I could be a multimillionaire, and I could be living out of a cardboard box.
That's a strange proposition. And you know, that's fine. I think we just here I am being really old. I think the MTV edit has fucked us good, meaning that our attention span has shortened to such a point that we never consider long-term implications or repercussions when we do anything these days. It's all about getting something now. Yeah, again, this very much sounds like I've got my pants up around my armpits, and yeah, they're riding up there pretty close anyway. But the thing is that I honestly think that the short-term view that we have towards the financial world is damaging us beyond repair.
It's because a lot of people that don't understand it. I mean, what you buy in today, you don't have to sell out on Wednesday, right?
Exactly.
You can hold it for years, and it may go up, it may go down, but like, there's no one forcing you to sell. And it seems like there's pressures all over the place. Like I now spend a lot of time on Reddit, and I've been going to Twitter a lot more, and I see like there's this constant relaying of messages to sell certain things, to buy certain things. It's like you don't have to do any of that. Don't listen to what people are telling you to do.
And you know, I mean, both of you guys raised a good point here. You know, my trading is like long-term swing trades. A lot of people find it boring, right? And that's the issue. A lot of new traders and I guess even people who say they're investors but turn out to be day traders. You know, they gravitate towards the day trading because that's sort of what's that, you know, get rich quick thing is what's on social media a lot, right? That's what gains the attention. But you know, I've said this before, but a lot of the top traders and hedge fund performers on Wall Street get paid, you know, in the billions per year because they have a consistent track record of, you know, bringing up to like 20% gains a year, right? Whereas some of these guys on social media say you should be bringing in 300% per month, right? So that consistency, I think, is very important. Like I think patience and being calm and, you know, blocking like certain things in your trading process is very important, and it gets down to what Galen was saying, right? That's sort of lost in this generation, I guess.
That's true. It kind of shows us that whole element that kind of what you're talking about, Vishal, where a lot of the institutional guys they're saying the same thing. They're like, yeah, at a time like this, no amount of experience or intelligence will help you in the market. It's mainly temperament, because it's human nature. You know, you're sitting there, you're seeing your neighbor, you know, Joey Joe, you know, make $5 million in one night from one bid. And although he might have done his due diligence and everything, you can't help but feel it's human nature. And you're like, let me just jump in, just put my life savings or my mortgage on it. You know, you just can't help it. And I'm like, oh, how many times has that happened? And it's repeating and it's repeating. And people are just doing it without understanding that some of them will succeed and some won't. But the number of that will be burnt would definitely be higher than the number that'll succeed. It's kind of the weird thing that's going on right now. And it's when you go on, like Joseph was saying, when you go on not TikTok, when you go on even LinkedIn now, the advertising is on a different level. Wealth Simple, every time they introduce something new, they pop me an email real quick. Shiba Inu now available on the platform. And I'm like, damn, didn't they just have a bull thing like 3 days ago. Like, I guess this is perfect timing. Let me buy some Shiba Inu. And it's humor me for a second. It does sound silly, but people actually think like that in the heat, in the heat of the moment. It's like, oh, it's available for me now. I can trade it free. But I don't want to get into that whole thing about the brokers also gamifying the whole industry. But yeah, there's this whole gambling mentality that's kind of there, but it's hidden under the guise of investing.
Yes, very much so. And TK has illustrated very well. It is very much supported by the establishment. They have leaned into this hard, and in many ways, as you said, have gamified the entire segment to the point where it's meme driven. I mean, this is the reason Tesla exists at a near or over $1 trillion valuation, is because of meme trading. The company is at a valuation that it can never justify. It has to lose every competitor within the space to be able to get to the point where it can manufacture enough products to cover what it currently is worth. And that's never going to happen. I mean, I guess Volkswagen and Ford have become a little nicer towards Tesla because they're afraid they might get a hostile takeover bid. But the thing is that truly it doesn't exist, the value within that company. And the chicanery of Musk has been left unexamined by the SEC almost criminally. For instance, let me outline the recent deal that they supposedly had with Hertz. Now, I'm ready to believe Hertz more than I believe fucking Musk, because Musk came out and said that this deal that had been advertised, which he didn't do anything to come forward and say this isn't true, said that they were going to purchase at a possible $4.6 billion. And of course, Hertz doesn't have that, never would.
Wait, sorry, Galen. Yep. I just want to make a note here.
Yep.
That's a pretty impactful statement. He rather trust the company that's being honest, that is going into bankruptcy, than the company that is probably not doing the best things with its books. That's a big statement. I appreciate that. It's like I rather trust the people who are telling me they're broke.
Absolutely, it's fucking true, right? And here's where Tesla and specifically Musk, since he is now, despite what he says, the face of the company, and whatever he puts out on social media is tantamount to a fucking official press release, which means it should be tightly fucking examined and regulated and controlled by not only his board of directors, but regulatory bodies such as the SEC. So Hertz announces the deal. He remains fucking silent. His stock skyrockets. And it's ridiculous because the company has only sold 790,000 fucking cars since Musk slinked into the CEO chair, and now they're selling another 100,000. So they still even haven't made 1 million vehicles, whereas companies like Toyota produce 10 million vehicles a year. They now shoot him up over $1 trillion, and he remains quiet. Now, I would like to think, and this is arrogance on my part, that after people like me started calling out the deal and saying this is clearly monopolization, that you are doing, you're subsidizing this deal at the detriment of competition, and you are purposely just shoving out your cars, that he just turned around and said, nope, deal never happened. And then Hertz turns around and goes, what do you mean it never happened? We signed something. You've already started deliveries. Like, what the fuck's going on, right? Okay. Here's where Musk really screwed up. He said after he had made this announcement that there was not an impact on the company's economies. Well, if you look at the real revenue, and if Hertz had actually paid the $4.6 billion for these vehicles, that is a 20 to 30% share of their actual revenue that they reported recently at 30 some odd billion. That's definitely a material change. So if this deal had not happened, and it was announced publicly by a company, it is his responsibility to immediately address that news to say that no deal exists, but he never did. Okay? That is a clear violation of SEC regulations. That's criminal. That's not just ethically not obtuse, ethically wrong. This is criminally offensive. The SEC should have called him out at that moment, right then and there, but they never did.
Yeah, definitely. Because they have a cutoff of anything above 10% of your sales from one customer. You need to report in an 8K as soon as the contracts are
Absolutely.
material.
Absolutely. So that's a clear violation. He backed out like a two-headed baby to avoid the bad press, and the clear, I guess, the revealing of how his monopolistic practices were beginning to happen. He and Uber were going to subsidize the shit out of that sale in order to keep both of their collective asses out of the market fire, right? It's improper competition. It's not the way that Friedman has portrayed the free market. He said that everyone should have a crack at it as long as they play the game. And he's clearly not doing that. But what he did do, on top of lying then again to say that they had no deal and it would not impact their sales, this is something else the SEC should examine. But what he did do is he turned immediately around to a country that, unless the Chinese government or the CCP decides to actually take a peek into what the fuck's going on, he's decided to put his cars out in China alone, at $0 down, when he's hiking prices in the US. This is just the Hertz deal, but on in another country. This is clear violation of competition rules. This man is breaking the law and needs to be brought to the carpet, if not censored on social media. He should be forced to create a public relations department in his company and stop talking.
I agree. I think he needs to focus on being the CEO and less on being the CMO.
He has a company worth $1 trillion with assets that he himself has admitted to that have no value. The solar panel segment, he has said, is dead in the water, adds nothing to the company, didn't perform as expected. Of course, this was a way different story than when he convinced everybody that Solar City was the best thing ever. He was merely pulling his own investment and his fucking criminal brother out of the fire when he bought that company, and he did it on his shareholders' dime. He continues to benefit from manipulating the market, manipulating other markets such as cryptocurrency. This man is a bane to society, to capitalism, and fucking democracy in general. He makes my stomach turn. There we go.
And he should. You know, if you look back 2008 when they wanted to regulate the banks, it was the total of the banks. The whole system was under jeopardy. But the big four were the ones that were kind of being looked at in 2008. Situation is even different here, where some of the companies are even more levered than some of the banks back then. And they're even bigger today than they were back then. I feel regulators are looking at this and saying, this is another too big to fail, but this is something that they can't control as easily as the banks. And I hope that has caused them to start to think about different ways to actually regulate some of the larger companies. If Tesla is a tech company, they should regulate it as a tech company. I've had enough of that argument where I'm like, okay, I get it. It's one of the two, but just regulate it as a large institution that has entrenched itself in a lot of parts of the economy, and that it could affect millions of people. Because it is pretty large, and I wouldn't want to see a company like this go under because of the domino effect it can have on a lot of the relations that it does. But the trajectory it's going, it's kind of like good news, bad news, good news, bad news. CEO not really allocating capital well. CEO focusing on other things, the crypto space, and instead of focusing on his core business and stuff. It's like, okay, this is going to be a problem. And as a regulator, if I was sitting in that seat as well, I'd be like, they're just too large to do anything right now. Unlike the other guys in the East there, they would just pull the rug straight under. They just did it with all the Chinese tech companies.
Yep.
Most of them were trading around the same valuation as the US companies, and now they've lost billions of dollars. Almost, I think Alibaba lost close to $300 billion in valuation because of the rug pull.
But the problem is they need to, sorry, TK, to jump in like this, they need to lance that boil. Sure, it might be, figuratively speaking, too big to fail, but in an effort to save the stock market and the economy itself, they need to pop that fucking balloon, right? The problem is that Tesla is an atrocity at this point in time and continues to value when, this is clearly a case of the emperor wears no clothes. What the fuck is going on? It's not just that he's doing things that are, let's say, corporately incorrect. He's actually committing crimes.
That's true. That's true. That's why I'm like, if they're taking any lessons from China, they should just start rug pulling. It seems like it's an inefficient use of power, but it kind of does work. It is what they're supposed to do, checks and balances on companies and people that have a large influence on the total culture of the society. Because yeah, I think they really want to pull the rug, but it's just not American. It's just not. It's just it's not American enough.
Well, that's the thing is that we've idolized this individualism, which doesn't really exist, and we figure that without these quote unquote great men who have all derived their greatness from the collective surrounding them, that we will no longer succeed, which is absolute and utter crap. This paradigm needs to be rethought because it's basically oppressive, especially in our current state. Just to sort of trip past his business dealings to show what an absolute amoral ass he is. He was pulled to the carpet somewhat on Twitter by some UN officials saying that he could peel off $6 billion, which is roughly 2% of his ill-gotten worth, to feed people, 40 million some odd people you could feed. Of course, he twists this statement into solving world hunger, which is completely false. It was never spoken out to be that way. But like many people who have no nerve and no intellect to fight an argument and know that they've been caught, they blow it to the other end of the spectrum, so it's an impossible argument to go with. So he said, yeah, I'll be sure to sell all that $6 billion of my stock, which makes up nothing. Big whoop, fucking guy. Does he want a chest to pin it on? The metal. Anyway, he said, I'll peel this money off if you can explain to me how to solve war and hunger. Well, we haven't been able to do that. But you know what? At $300+ billion worth of work, would it fucking hurt you to feed 40 million people, you prick? This is why I totally believe that the billionaires are a social policy error. They should not exist. They have too much power, they are way too privileged, and they sit above the law. In my mind, any assets, and I'm including stuff that hasn't been cashed in, over $1 billion should be taxed at 80%. Now you're going, wait, that's pretty harsh. Well, if you look at the fact that he has a $330 billion valuation, he's still going to walk away with about $10 billion. Hey, that's not so fucking bad. Can you spend $10 billion in your lifetime? Probably fucking not. Especially even if you're buying these ridiculous fucking super yachts, electrically driven, that take as much fossil fuel to create as every other vehicle on the road. Thanks, Elon, you dick. Far as I'm concerned, you should be taking Zuckerberg, Bezos, Dorsey. Sorry, Dorsey, you're in the same fucking group. And Musk, and pile them into a room, shut off the lights and lock the door and walk away.
I honestly don't think you're alone on that thought. There are a lot of people talking about it on social right now.
You're really not alone on that front. The great majority of my friends are like, man, like they love to make guillotine jokes, right? It's like this is how we started the French Revolution. We dragged them out in the middle of the street. We put their head in the guillotine, and we dealt with our social inequality problem. I do not stop there, though. I ever so politely inform them of what came next.
Oh yeah, no, the night of the long knives nobody wants. Now the thing is that, and the terror thereafter. I mean, exactly. It's the revolution does need to happen, unfortunately, because it's so entrenched at this point in time. And I'm not advocating for people to go and brandish pitchforks and run out into the street. I'm just saying that the intent and the determination has to be that strong, because right now we are in a 17th century situation. 70 to 80% of the worth and the money is collected between 20% of the population and even less. And that is enough of an income equality. And I'm not just talking about, ooh, boo-hoo, I wish I could buy a Tesla. I'm talking about money velocity. I'm talking about the health of the economy. I'm talking about paying back into the system that created your atrocity in the first place so that it can continue to be a fertile ground for other business. All of this is necessary. None of this is a moral argument. This is an economic fact that we have ignored.
That's true. I want to pose a story that I heard from Dave Chappelle's special on Netflix. It's a pretty funny Netflix special, but his story is, it got me thinking. He was talking about back in the day. I don't know how PC this story is to tell, but I'll go into it anyways. But he was talking about a slave back in the day who was set free by his then quote unquote master, and he was the first one to be free. After he was freed, he decided he needed to be a working man, a capital man, and in his search for success, he ended up being a slave owner himself, and he did even worse things than these slave owners used to do as well. But obviously, he's telling the story for something related to the U.S. But yeah, he's saying our society runs like that, where the new leaders come in, populism kicks in, they flush out the people who are terrible, but then it's very hard to take those habits that people have learned on capital accumulation and take that away from them. So it's kind of like what you're saying, what you said a couple weeks ago. It's kind of fixing the system underneath it, because the people will always kind of end up in the same boat.
We repeat the story again and again. We change our masters out. That's basically what happens. We used to have railroad barons. Now we have tech monsters. It's the same game, just different faces. On that note, I would like to reiterate that we are four common people from the masses. I know that I'm not an investment professional. I can't speak for anybody else within the crew. I don't know if there's any accreditation that I've missed, but we don't have that. So you can take it as a vibrant opinion and into your daily life and do your due diligence, make your decisions on here. But as far as I'm concerned, get the fuck out of these overpriced stocks and start buying commodities, but really just buy the gold and silver itself from an exchange. Take it home, put it underneath the bed, and when the economy goes to shit and the whole thing falls apart, you can actually buy your bread. Can't do it with paper, especially if it's not recognized. Anyway, that's me saying weird ass stuff. I want to thank you all for coming out and listening. I think we should probably let you go because I let this one drag on, mostly because I wanted to yell about Musk because he's such an asshole. But, you know, we're going to let you go, let you get on with your day. I'd like to thank Vishal very much for his educated breakdown of the market and the macro situation that we face. Joseph for his learned opinion on crypto and where it stands and where it's going. TK for his fundamental no-nonsense approach to what the hell's happening. Love it, TK. Thank you very much. And me just for shouting because I like to. I'll see you guys next week. We'll all see you next week. That is if I don't get killed first. We'll do this all again. All righty? Take care. Bye.